Hello, everybody. It's John King, and I'm coming to you with a special Thursday edition of my Friday market update. So, as you know, every Friday I give you an update on what's going on in the market. Tomorrow is 4th of July. We're all going to be enjoying some barbecues and fireworks and fun with family. And so I wanted to give you an update today on what's going on, because there's actually a lot that's happened in the last week and a lot that's going to be going forward that's going to make a big impact on housing, home ownership, and I want to dive in and make sure you don't miss any of it. So first and foremost, we got a jobs report this morning. First Friday of every month. They obviously moved it to today because tomorrow is a holiday. They give us the jobs report. Up until today, we expected it to be a very low number, not a lot of jobs created. And the jobs report surprised us. Significantly higher number of jobs created than we had expected. And that is bad news for mortgage rates, and it's bad news for kind of where the Fed's going to go. And I'll talk more about that at the end here. So I want to kind of get through all the moving parts of what's happened in the last week. But what's happening right now is all of the private reports are saying, hey, jobs market is not doing well. The economy is struggling. I'm hearing it from contractors. I'm hearing it from professionals and technicians. People are having a hard time finding work. And I think that the government is still not accurately tracking the data. That's my feel. I don't know what's really happening, but the data that we're getting out of the federal government does not match what we're seeing in lots of other places. And today just exacerbated that a little bit further, because we had even a bigger disparity between the jobs that were created. The government says they created a bunch more jobs, whereas the private market is saying, yeah, I don't think we created as many as you think. We'll see ultimately where this goes, but it does add fuel to the concern about inflation staying high, and really impacts how the Fed's going to proceed. So we'll talk about that in a minute. Two big things that happened in the last week. One, state of California passed their budget. I referenced this last week, but I want to be super clear on what's going on. So first of all, lots of housing initiatives that were included. They're revamping the state government on housing and who oversees the different departments, and they're combining a lot of departments into one, and they're creating a Department of Housing and Homelessness, which CalHFA is going to report up into that department once it's all put together. I don't see any short-term changes, but it will make it hopefully easier to navigate through some of these waters, because it's all under one umbrella, but now we got another layer of management in between. The other big thing that happened is California Dream for All is going to have another $300 million. That is more money than what we saw a year ago. So that's really, really good news for the future of first-time home buyers in the state of California. We will know in the next month or two when the state brings along what's called a trailer bill that tells us, hey, are they still going to have to be first-generation home buyers, or can anybody use the money, even if they're not first-generation? So those are some of the questions that we don't know yet. But people who have vouchers right now, keep shopping. Those of you on the waiting list, it looks like the waiting list is flowing faster than we thought. And so it's good news for those of you who are getting close to or even anywhere on the waiting list. Your chances of getting a voucher, in my opinion, are significantly increasing compared to what I thought just a few short months ago. All right, let's switch to the federal government. So just minutes ago, an hour ago, the federal government passed, not the House and then the Senate passed Trump's spending bill, the big beautiful bill as they call it. So that passed, and now it's on to Trump's desk for signature. Everybody expects Trump to sign it. So I want to kind of cover some of the things that are in here that really matter to home buyers and homeowners. I said Trump. Anyway, so I want to cover some of the things that are in here and what it's going to mean to you. So first of all, there is a significant increase in the SALT deduction. Now, if you don't know what SALT means, no, I'm not talking about sodium, and increasing your SALT is not a good thing. SALT is state and local taxes. So we all pay state taxes. We all pay local taxes. One of the biggest local taxes is property taxes, especially in high-cost states like California, Texas. You've got a really high property taxes. Well, the federal government said you had a cap on how much you could deduct of state and local taxes that you paid, and that cap was $10,000. There's a lot of homeowners in California who pay significantly more in property taxes plus other state and local taxes, way more than $10,000. Well, now you get to write off up to $40,000 of state and local taxes. So that is a big benefit as a home buyer or a homeowner, is you get a much, much bigger tax write-off than you were previously getting in high property tax states. So that's big. The second one is what they're calling Trump accounts. Now, I don't have a lot of information. Oops, I scrolled down too far. Oh, well, I'll cover this one. Mortgage interest deduction survived the chopping block. So what happened is there was concern that they were going to reduce or eliminate mortgage interest deduction. It's always part of the conversation. They kept it at $750,000 of principal that you can write off. And if you took out a loan before December of 2017, you can actually write off up to $1 million of interest, $1 million of the interest. You can write off the interest on up to $1 million of balance. The current rule since 2017 that is continuing is you can write off the interest on up to $750,000 of principal balance. All right, let's cover what Trump accounts are. So this one I'm not 100% clear on. There's only like 2 sentences on it in the bill, but it basically says that the bill provides for the creation of Trump accounts. And they're tax-free investment accounts that I believe it said you can put up to $5,000 a year into that account. And there's certain things that you can pull the money out from tax-free. So think about this like you think about a 529 college savings plan. Now, I don't recall what all the things were that they said that you could pull money out for, but one of the most important things they said you can pull money out of there for is for your down payment for your first home. So you can put money into this account up to $5,000 a year, and when you pull it out, it's tax-free. You put it in there tax-free, it grows tax-free, and you get the ability when you take it out to not pay taxes on the money if you're using it for a qualified reason. One of those qualified reasons is buying your first home. Now, here's the thing that struck me, and I don't know if I'm reading this correctly, but it said it's only for people under 8 years old. So I am guessing it's a plan that you would start for your children that they can use for one of these purposes. But one of the purposes is first-time home buyer. So if I'm reading it correctly, basically this is a program that allows you to help secure the future for your children and your grandchildren by contributing money into an account, as long as you started, I believe, before they're 8 years old. Again, details are sketchy here. That money then can be used when they become an adult. So now it's been growing for 10 to 20 years, and that money has grown, and now you're able to use that towards a down payment. So it's a way to help you fund their housing and home ownership stability in the future by contributing money into this Trump account that is essentially a 529 savings plan that you're using for the purpose of many different purposes, a few different purposes that were on there, but one of the purposes you can use the money for is to buy your first home. So pretty interesting development, pretty interesting way that we can help our children to create opportunities for buying homes in the future. My kids, unfortunately, are all over 8 years old, so not really an option for me, but maybe down the road I can help my grandkids with this. All right. The 2 more things I want to cover. One is on 1031 exchanges. So that was one that was a lot of concern about that surviving the chopping block, being eliminated. So a 1031 exchange allows you to sell a home or a business property, a rental property of some type, and buy another one within a certain amount of time, and do that without paying taxes on the sale. Because otherwise, if you're selling something and paying taxes on it and you're buying something else, it discourages you from exchanging or trading them. But if you can sell one asset, a home or a rental property, and you can buy another home or rental property, residential or commercial, then you can trade up to something that gives you better return on investment. It gives you more flexibility to exchange for something that fits your life at that moment, whether you need to generate appreciation or you need to generate revenue each month, cash flow. There's lots of different strategies on how you do investment properties. And 1031 exchange allows you to transition. It's kind of like when you're investing long-term for your future investments, stocks and bonds. Younger you are, the more money you're going to put in stocks because you want it to be more volatile, because it has technically more growth opportunity. The older you are, you want to shift more into bonds again, I'm not giving investment advice, but overall ballpark concept, that's typically what people are doing. Well, the same could be said for your real estate investments. But hey, in the beginning, as you're younger, maybe I'm looking for appreciation. I don't need income from this property. I need appreciation. That's one type of property. As you get older, hey, I got to start making sure that these properties are giving me monthly income, that they're paying me cash flow. It's like stocks that pay you dividends. That's money you get now, versus stocks that are growth stocks that are designed to increase or appreciate, but they're not paying you out dividends every single month. So there are pros and cons in different strategies. 1031 exchange allows you to shift strategy on your rental investment portfolio, and that's a critical piece that survived this legislation. So super happy to hear that. Two things I want to cover, two last things I'm going to cover. One is what's the Fed going to do now? And then number two is just what questions you may have. So if you have questions and you're watching live, post them right now. If you are watching recorded, post your questions and I'll get back to them later. But basically, what's going to happen now with the Fed? Up until this morning, everybody thought when the Fed met later this month, they're going to finally start lowering interest rates because it's clear that inflation is under control. It's clear that the jobs market is shaky and that we're creating fewer jobs and that unemployment is going up. And every expectation said those two things are true until this morning's jobs report. And now you've got the bigger piece of the argument is the Trump versus Powell argument that continues to get worse. We just had the head of the FHFA, Bill Pulte, tell Congress that they should be investigating Jerome Powell for lying to Congress about the nature of renovations that are being done at the Treasury building. Well, I think this is getting kind of nasty. Like, okay, I'm not picking a side here. I'm just being super clear. Guys, if you don't like the job that somebody's doing, great. But now you're picking apart something that has nothing to do with the job that he is doing. You're talking about the renovations and repairs being done on this building, but you're trying to find any reason to say, hey, he impeached himself. He lied to you when he said how much money they were spending on this stuff. And I don't know if he did or he didn't, but it's kind of like being on the schoolyard and just slinging mud and saying, well, I'm mad at you about A. Oh, I can't get mad at you about A anymore. Then I'm mad at you about B. Well, I can't get mad about that. Then I'm mad at you about this other thing. Pick something you're mad about and be consistent. So the problem is we have Trump fighting against Powell so hard, and Powell has no easy out here. If Powell lowers interest rates, it's going to look like Trump convinced him to. If Powell doesn't lower interest rates, we're going to be in a position where maybe we're waiting too long to lower rates, and that's going to create a different set of circumstances that are not going to be good for the economy because the economy is going to slow down even more than I think it's slowing down right now. So we have a major catch-22 happening right now. It is not getting any better, but this jobs report this morning gives Powell more cover, gives Powell more of an opportunity to say, look, jobs seem to be strong, and so there's no reason to lower interest rates because all lowering interest rates is going to do is spur the economy on even stronger, which means we're going to have even more inflation. So this is not good news for a reduction in interest rates anytime soon. Remember, mortgage rates do not get controlled by the Fed. So the Fed is not deciding what's happening with mortgage rates, but what happens with the Fed influences the rest of the economy, influences the rest of the market players, and it influences where mortgage rates go. So as the Fed lowers their rate, mortgage rates likely will move lower. Guys, that's all I've got for you today. It does not look like we have any questions, but I appreciate you listening. If you need anything, please reach out. I am clearly interviewing to be your loan officer. So if you are looking to purchase a home, refinance a home, need advice on investment properties, scan this QR code that is right up here. Am I pointing on the right side? I think so. Yeah. Scan the QR code right up there, and let's get together and see what we can do to help you. Hope you have an absolutely wonderful 4th of July holiday with your family. Enjoy your weekend. Stay safe, and we'll talk to y'all soon. Bye-bye.